Welcome to Money Conversations with KJ. KJ is a lifelong entrepreneur who's made a lot of money, lost a lot of money, and found his way back again. If you're looking for a sterile how-to, you're in the wrong place. KJ and his guests will walk you through real-life situations told by the people who live them, and they are as messy as they are inspiring. Each episode will offer lessons learned, advice on how to replicate successes and avoid pitfalls, and a new perspective to power your financial literacy. Far from a one-size-fits-all, this podcast can help you build a roadmap to your personal promised land. Milk and honey for some, whiskey and steak for others, and remind you that you're not alone on this journey.
Well, hello, everybody. Welcome back to the show, Money Conversations with KJ. I'm KJ, and I'm happy to have a guest on here today that we actually found each other online. His name is Mr. Evan Herman. Welcome to the podcast, Evan.
Hey, thank you so much. I appreciate it.
So what I just want to let you guys know about Evan has his own podcast, which is called The Whole Person Podcast. And Evan focuses on personal growth and entrepreneurship in the areas of family, finance, friendship, fitness, and fun, right? All of those great things that we all want to have in our lives. So, Evan, I want to take these people on a journey of your path first, and then we'll talk about these things that I just described for you. But for the audience out there, let me ask the first question is, you're an adult and we all deal with money on a daily basis and the things that we aspire to have and do. Talk to me about how old were you when you kind of really understood what money was for and how we used it and how you went about obtaining it?
That's such a good question. I feel like there's different stages at my life that I realized what money was for, the value, and how it worked for me or the lack thereof. I would say within the last 3 or 4 months, I really got a much better understanding of global economics and what's going on in the U.S. and around the world with all the inflation that's getting ready to happen because of all the printing. So that's a very deep conversation there. But to start, I've always worked for money, whether it was from a newspaper route to cleaning golf balls to selling candles door to door, as a young child, mainly because I wanted money so I could go do something for fun. I didn't have this concept of saving. I had a concept of giving, and I was never really much of a saver or planner until I became an adult. And then once I realized, oh wait, there's these things called bills. I need to become a better steward of my financial my income.
That's a very common path, very, very common. And you're recognizing now at this stage of your life that, man, why didn't someone teach me about this stuff, right? And so that being said, when you were, maybe in your early teens or 10 or 12 or whatever, did anybody sit you down? Was it mom and dad or an aunt and uncle or a friend that sat you down and talked about money, or did nobody ever talk to you about money?
Yeah, so I got sat down a lot of times with my dad where it was, hey, you spend too much money, you need to save it because you never know when you're not going to have it. That was the gist of my conversation with my father on financial education and literacy. And that didn't help, because I wanted to have fun. I wanted to be able to go do things. And so what probably would have been a better approach is to teach me how to budget so I can go have fun, how I can save. Because keep in mind, I was working for like $30-$40 a month. So it wasn't a whole lot delivering newspapers.
Right.
And so, as a kid, that was really easy to spend really quick. And so I just didn't feel like I got to do enough to enjoy, I shouldn't say enjoy my childhood, but, I didn't get to go out and eat. I didn't get to go, my parents wouldn't buy toys or stuff like that. We were very frugal for the most part. And so, I didn't get to experience some of those things. And so anytime I had money, I would just go blow it right away, literally the moment I got it. And
right.
So for me, this idea of saving wasn't a fun idea. I wanted to have fun. I wanted an experience. I wanted an emotional hit of enjoyment. And so what ended up happening is, I associated money with fun.
Right.
And the more money I had, the more fun I had. And the quicker I went through it, the funner that process would be until you had no more money. And then that wasn't fun.
Right. Again, I hear this story over and over again. And, you would think, and again, I don't know if you're a parent or not, and I'm a parent and I teach my kids, but there's parents out there when they'll say something like that, hey, save your money. And that's all they say, which is just like, I had someone on a couple of weeks ago that gave a great analogy, and it was about kids. And it was like when your parents used to tell you, hey, go and clean your room, and then shove you in your room, shut the door and say, don't come out till it's clean. And 30 minutes later, they'd come back and your room's not clean. And the analogy was, well, yeah, he told me to go clean my room, but he never showed me how to clean my room and how he actually wanted it to be cleaned, right? The same what you just explained was like your dad told you to save, but he didn't tell you why to save. He didn't tell you where to save. He didn't tell you what to save for, right? And I think this is the big disconnect. And so then as you become a young adult, and then you start maturing and you're just trying to figure out this money game all on your own through, trial and error, and costing us the most important commodity that we have, which is time, right? And so as you're figuring it out, still going on today, that, your mindset, right, which is so important. It's my first module that I teach is all about the mindset. We really have to learn how to think and act with our time and money in order to ensure ourselves to have money down the road for the finer things in life that we want to do. Own a home, be able to sleep good at night, not stressing that, I have to have my paycheck to pay my bills kind of thing. So when do you think, because you equated money to fun, right? Money got you fun, right? To where some people in today's world will be like, money equates eating. Money equates, keeping the lights on kind of thing, right? Talk to the audience about when you figured that, man, money is not just for fun. Money is that I need to survive. How old do you think you were when you figured that one out?
Well, I'm not 100% sure how old I was. I was either 22, 23. I just got married the week after graduation. And I would say once we got back from the honeymoon, that was that's when it really hit me. I thought as soon as I graduated, everyone would want me based off of the school's promises. Like, yeah, everyone wants an Oral Roberts student, which, we have a great graduation class. I had a theology degree and I live in Tulsa. And there's a lot of people that come to this area for ministry purposes. So, I wasn't so special, and it was very, I couldn't get a job in the field that I had studied for and taken out student loans. Mm-hmm. And so now I have to figure out what to do that's not ministry related. And now my degree doesn't even help me. And then the economic, this was 2010, so it wasn't quite 2008, but here in Oklahoma, it hit our state a little bit later than most states. And so it was actually very hard for me to land a job. And, it took me about 9 months before I landed a job. And so my wife wasn't too thrilled with me. But then, a lot of jobs that I had were temporary part-time jobs. And so what ended up happening is, I had over 21 jobs in 3 or 4 years before I got into real estate. And it just created this desperation in me that I just took the first thing available because I needed money, that I wasn't paying attention to the environment, the red flags, the issues, the men or women that I'd be working for, because it put me in a place of desperation. Because I realized, okay, now I have to survive and now I need money. And because I was in survival mode, I didn't get the luxury of actually being more wise about where I went, because I just went with whoever would accept me at the first available opportunity.
Makes sense. And again, so many people in that same path, right? When our country goes through the financial turmoil that it does, it can be very hard for people. And this is why the importance of learning financial literacy as early as we can. and setting goals and then reverse engineering your goals to how you're going to get there, right? You got caught up in a time of, like you use the word desperation, like I got to make money, I got to pay the light bill, I got to put food on the table kind of thing. And your degree that you worked so hard for and paid for wasn't helping you at that point. But again, I mean, definitely don't beat yourself up about that. There's so many people in that boat, right? And some people beat themselves up and just get depressed all about, their situations like that.
Well, I'm 11 years removed from that, so I'm good.
You're good now. You walked through it. But think about all that time, right? 11 years, right? And more than that, because your journey really started when you decided to go to college for what you wanted to study, understanding, what's after that. What am I going to do? I'm going to go train to do this, but were you doing things to line up your job when you got out? And I think for most people in this country, that once you get out of college is when you really just start thinking about it. And I taught my kids, no, pick a profession before you're even going to study about it, right? Mm-hmm. What's the job market like before you're going to get in there? There's just, the numbers are outstanding on how many people have degrees in XYZ and they go do ABC, right? Which... now you're paying off student loan debts and all that kind of stuff. What about, talk to us about, since you put yourself, I like to call it on track. Okay, let me regroup kind of thing you did in your life early, right? 10 years ago and put yourself on track and decided now you're in the real estate field. What are some of the things that you do today, or how did you be proactive in learning about money?
So one, I'm very, very, very interested. I mean, it's a passion of mine in personal growth and development. And so I really like learning about things that I don't know a lot about to grow my understanding so I can just be a better person. And money was such a critical area that I put a lot of focus on that early on. And so there was a trigger event that actually happened that really catapulted this. My parents paid probably $110,000, $100,000 of my tuition, my college, which was great. And then I ended up with like $22,000. But they always told me if I go to college, they'll pay for it. And so then I, had to pick an expensive one, right? They weren't too thrilled about that. Anyway, and it wasn't like they had the money. I mean, my dad worked for it yearly and he sacrificed for it. And what ended up happening was, a couple of years after my wife and I were married, a vehicle that he bought me broke down again. And so this is like the third or fourth breakdown that's costing my wife and I several $1,000s to fix. And I think at just this time, the car's only worth maybe $3 or $4 grand, but now we're going to be into it for $7.
Yeah.
And so we just decided, you know what, let's just get a different vehicle and stop putting money into this. And so, I took out my first loan other than student loans, which was a 2003 Honda Pilot. And I remember crying, taking out the loan because I didn't want to, but I felt like I had no choice. Meanwhile, my car broke down when we were traveling. Okay?
Oh.
And so we weren't in this was either you have to stay here for like a week and get it fixed, or just, trade us your car in and we will get a new car. So we decided, to go for the new vehicle. Well, not new, just new to us.
Right.
Well, because my dad didn't approve of that, he decided that he wasn't going to pay the remainder of the student loans. And so, which would have been nice to know that when I was talking to him about it.
Mm-hmm.
He could have said, hey, if you do this, I'm going to do this. But no, he chose to do it after and not let me clue, because that would have been a part of my decision-making process. However, that happened, and now I'm not just paying for a new vehicle, but now I'm paying $200 extra in student loans a month. And I mean, I kind of felt entitled to be a little bit honest, like you promised and he's like, no, I don't care anymore. I didn't want you to go get in debt, and I was trying to help you out so you can have all your debt you want.
Right.
So it's his mindset. And I just remember the overwhelming, crushing feeling of debt. And it was at that moment that I just hated it. and my wife didn't have any student loans. We had some credit card stuff, but we always kept it really small, like $3,000 or under. And so what ended up happening is I just really got angry at debt.
Good.
Because not only did I feel like I wasn't making enough, but by the time it came in, it was already gone, and I couldn't create margin in my life. And it took me 10 years to pay off that $22,000. And we paid it off last year. Thank God. Finally.
Right.
But what ended up happening, though, is it created this hate for debt in my life. And because of that, it helped me make other decisions. However, I wasn't always strong at that. There was another time we bought another vehicle with debt because I felt like I had no other option. And what happens is we often rely on debt when we feel like we have no other option. But I want to share this quickly. Like in 2019, we had one of the worst financial years of our life. We had 7 financial hits that happened to us, and combined, I mean, it very well could have all bankrupted us, but 4 of them was medical issues between 3 different members of my immediate household. I had 2 surgeries on 2 different things. Our car broke down. My wife got in a wreck. It was just one thing after another. So there was a moment where we had 0 vehicles in 2019. But yet we still owed on one of the vehicles, and we still had debt for the car, not the Honda Pilot at this point, but we still had debt for the Prius. We had a tornado shelter, student loans. And, I reached this point where it's like, okay, if I really believe in getting out of debt, I cannot use it to make my situation easier. And so, my wife and I, we actually kind of disagreed where she wanted to get the debt because we needed the vehicle. I said, no, I don't know how we're going to do this, but we're not taking out any more debt. And so we ended up renting a car for about a month that was paid for through insurance. And then we borrowed another vehicle for about 6 months. And that was very helpful. And so what that did is that allowed us to save enough money to buy another vehicle cash. And that was a very big change in momentum for us, because along that way, we ended up paying off my car that we did get back after the collision. We ended up being able to pay off this tornado shelter that we still owed money on. And so now we've created margin, and so that it actually made saving for the next vehicle in cash easier. And so we just basically debt snowballed our way out of debt. And that really helped us get margin in our life. Now we still have medical debt. However, because it's 0% interest, I'm giving them as little as I can and stocking away the rest.
So a great lesson here for a lot of you guys listening out there, that Evan, when I hear that story, sounds to me like because you had such a hatred for debt, which is great. You dug your heels in on being very disciplined with the money that you did have / make, right? Yeah. And this, so you probably didn't afford yourself hardly any luxuries in life for a year or a little longer to be able to get out of that debt. And I think this is the problem that happens across the country. People are so used to instant gratification with their money, right? Like you were saying earlier, you equated money to fun, right? Like, I just want to make some money so I can have some fun. And then now you're a responsible adult, and that's just not what money's for. And so I really applaud you for just digging in and getting yourself out of that debt, and you see the light at the end of the tunnel, so to speak, right? By getting rid of that debt and doing what you had to do. Look, you found somebody that let you borrow a car for 6 months. Great. Listen, there's plenty of people out there that have multiple cars, and if they're good friends and they trust you, you're responsible, you're not going to go beat my car up kind of thing. Hey, you're down and out. Let me help you out. Take my car for 6 months. You know what I mean? And so for you guys that are out there listening, if you at all are paralleling this journey that Evan was on, just know that Yes, debt is. I like to call debt is an anchor. That's tied to our feet. If like picture and imagine you're trying to swim out of a lake and you got a 30-pound anchor around your ankle. Like you got to work twice as hard to get up and out of there. But once you get up and out of the water on land, now you can pull that anchor up real quickly and then just release it and let it go, which is letting go of all the debt. So,
and also. So let's continue with that analogy. You have that anchor wrapped around your waist. You're underwater. What's happening? You're drowning. You can't breathe, and you have a severe amount of anxiety.
mm-hmm.
And that's what my life felt like. I felt like anxiety was my life for a number of years because of financial situations. And, we just weren't making enough. I think for the majority of our marriage, we were only making $2,000 above poverty level, which really sucked because it was enough not to get any help, but not enough to really mean anything. So we probably would have been better off making $2,000 less and qualifying for food stamps and qualifying for government help. But we got paid just above not to get any help. And so what really helped us through that time in our community, in-laws helped us. They didn't give us money, but occasionally they bought us groceries for a while because we just didn't have the money.
Mm-hmm.
And we weren't being poor stewards with it either. It's not like we were going out blowing money. We just didn't make enough. And it was very difficult. But that being said, what ended up happening, there's a couple things that really happened that changed our financial future. One is my wife got a promotion and a new job at work, and it ended up paying her twice as much. So that really helped. And then I left the big box company that I was at as a real estate agent, and I went to a smaller brand that basically was a flat fee commission. So that was like a 30% raise to me on everything that I made. And so essentially we almost I don't want to say over doubled. That doesn't make sense, but I think we raised our income by 65%.
Nice.
In 1 year. And, we made decisions to help raise our income. And then, as a believer, I often would tithe. I'd give 10%. And, there was this moment where I was just like, God, when 2019 hit us and we didn't know what to do, I was like, God, I don't know what to do. But I felt like him telling me to stop giving for a season so that I could prepare my family. And that made no sense to me, but I trusted that specific voice and I got out of debt. So instead of, tithing, I put that money towards debt elimination. And then anything else that we were saving for the vehicle. Well, then when something got paid off, we continued to take what we would have tithed and what we would have paid a debt to continue the debt snowball. Well, and then we got our finances squared away and in a healthy spot. And then guess what happened in 2020? The pandemic.
Right.
I couldn't have imagined having the amount of debt that we had trying to go through the pandemic. Even though my 2020 was really good as a real estate agent, there were about 4 or 5 months, though, at the beginning of the pandemic where things weren't so great in real estate because there's a lot of fear. I would say about 3 or 4 months.
Mm-hmm.
That there wasn't a lot, at least here. But then it opened back up and the market went gangbusters after that. And so because I was able to eliminate debt and we had margin, that really allowed us to be okay even in that economic downturn. And then, well, we can talk about investing at another portion because now we are able to invest.
Well, let me get back here because what you just described for a lot of you folks that are out there, I'm going to use another analogy just because I love using analogies. What you did is like when we all get on the plane and they say, hey, listen, in the case of an emergency, if the oxygen mask dropped down, what are you supposed, and you have your child with you, or what are you supposed to do? Give it to your child, or are you supposed to put it on yourself first? Right. And we're supposed to put it on ourselves first. Right. Because you can't help your child if you get knocked out. Right. So what you did there was, yes. So you shut off your tithing there for a season, as you described it, because, hey, you had to take care of you. Right. And there is nothing wrong with that, nothing to be shameful or anything about that. You had to take care of you first. You did the responsible thing. You, during that season, you did the right things with your money. Let me ask you, the things that you have learned in the last 10 years, what do you think, looking back, you would tell your 15-year-old Evan self about money?
When you first hear about Bitcoin, buy as much as you can. I honestly though, like, people ask me that question, and that is my legitimate answer. But
there was no Bitcoin when you were 15.
No, but it would have been like, hey, there's this thing coming out called Bitcoin, and when it does, buy as much as you can.
Yeah.
Hold it.
Well, so what money lessons would you tell your 15-year-old self?
Yeah. So the lessons I would have told my 15-year-old self was learn how to budget, and then not just save, but learn why saving is important, not just to spend later, but for emergencies. Because that's one thing that killed my wife and I, it felt like, over the years. Because when we'd have emergencies, like Dave Ramsey says, have $1,000 emergency fund. That's great. But maybe I had one emergency around $1,000 or less, but in a true emergency, it normally costs us $7,000 to $10,000.
Yeah.
And what ended up happening is we would get hit multiple times. Like, I can remember 4 or 5 years in a row that we'd have an event that would cost us $7,000 to $10,000. And it was struggling.
That's a lot of money.
Yeah. And so I just realized, like, one, have a good emergency fund, not just $1,000, but more than that. And then two, kind of the Dave Ramsey, pay off debt. Mm-hmm. And then also, one of the things that Dave Ramsey says is, sell your car, get a junker. Like, well, that's not good advice entirely either, because sometimes junkers will cost you more money than just having a good working car. Mm-hmm. And so, that's one thing that when I bought my Prius, one thing that really helped is because not only did it save me money on gas, just generally, but because of the low gas mileage, I actually made money driving it because of the deductions that I'd make for real estate.
Right.
So even though I physically had to pay out money on it per month for payment, but the amount of money that I got back per year on tax write-offs was far greater than what I ever put in. And so I learned to leverage other things to help make financial washes, if that makes sense.
For sure. No, that's one of the lessons I teach. We all have to learn how to leverage time and money, right? I leverage everything. I can leverage people. I can leverage time. I can leverage money. There's so many things in our lives that we can do that will help us out. And definitely when you do the math, right? And this is just doing math. You buy a car because of what you're do for a living. And I'll just use round numbers. Let's say the car payment's $400 a month. But by the time you can do the math at the end of the year of the write-offs, you're actually saving money versus buying cash, some $5,000 clunker that transmission could go out. There's a couple of grand, all kinds of whatever things could go wrong with it, let alone as a real estate agent. We do have to have a perceived, what's the word I'm looking for? Quality when we're pulling up the houses. And you want to pull up to sell somebody's, $1 million home. You can't pull up in a junker. He's not going to hire you.
Right.
You know what I mean?
And you're right. I also personally, I've learned not to care about that perceived value. Now, that doesn't mean I go get a junker, but I did get a Prius.
Right.
A Prius. I kept it nice.
No, a Prius says a lot of things about you. A Prius says, hey, I'm all about the environment. I don't need the big gas guzzling, whatever. I'm about the environment. And so owning a Prius is very respectable in many people's eyes. So I know a lot of agents that drive a Prius.
Minivan because I have no choice and I have 3 boys.
Well, there you go. You got a family. So, well, let's talk about. So you learned some hard lessons along the way. One of the things I talk about is tradition in my course, which is finding out where why we do the things we do with money. And in your case, you talked about what a lot of parents do: just tell you one basic thing: go save your money, or don't blow your money, or they don't really get in depth with this. And again, whether you're I'm sure that wasn't intentional. I have a saying, parents can't teach what parents don't know. And if your parents just didn't realize to teach you the intricacies of money at such a young age, or they didn't believe it was important when you were 15. And I'm a big believer. It's extremely important at 15. You should know, because that's when you're spending money.
I think it was more that they didn't know the intricacies, because I mean, I remember at 10 having a checking account. Like they worked with me on trying to write, like, and I was terrible at math. So, you know, my accounts were never really good to begin with, especially from an early age. But I mean, they worked towards helping me, but they didn't educate me in, you know, it was just like, I felt shamed for wanting to spend money, you know? And so that was no fun either. And then the rebellious kid in me is like, well, I'm going to do what I want.
Right.
You know? And so there was this process where they could have, I don't know, maybe mentored that a lot better than what it was. But again, they didn't have that either. And so they can't give what they don't have.
Right. But let me ask you this, because you said you had 3 boys. What are the ages of your boys?
5, 2.5, and 4 months.
So I'm sure you're going to have a plan for when your boys get, you know, that 12 or whatever years old and start, whenever they want to start, whenever they're your kids, guys, when your kids start asking you for money because they want bubble gum or whatever, that's when you got to sit down and start talking to them about money. Because now they realize I need money for the things I want. And, it, you know, at 12, 14, 15, whatever, they're all frivolous things, but you need to understand. And it's my belief that's when you start talking to kids about money. Don't, there's too many parents out there. They go, oh, they're just kids. They're too early. They don't need to know about it. Because what happens is their mindset is now being shaped around money, as yours was, right? As you described, I equated money with fun. See how that mindset happened for you? And it took you some hard years to switch that mindset. It took you some life experiences to understand I hate debt. Like you sound to me like you hate it with a passion, and you're going to do whatever you can do not to be in debt, which is a great thing. You don't want that anchor on you. You know, I taught my kids, you don't ever want to have the feeling of being broke. It's the worst feeling in the world. Evan, you've experienced it, and so you can attest to it. And as probably most of the people listening can, teaching my kids, my 21-year-old daughter who bought a condo last year at 20, who has fully funded her retirement account 3 years in a row. She doesn't know the meaning of broke, because I told her, I don't want you to know that meaning. I don't want you to know that feeling. And although now she'll say, Dad, I don't have any money. I'll say, well, you do have money. You just don't have the money. You don't want to spend the money on the things you want because you know better now, right? But you truly don't know what it's like to have no money. And am I going to keep the lights on or put food on the table, right? You've been in that situation, and you guys don't want to feel that. So, Evan, let's talk to the people about, okay, it took you, like most people, this is a 10 to 15 year journey to figure out money and how it works and what I'm actually going to do with it now that you're responsible and you're a parent. What are you doing now that we can share with the people? Like, hey, I learned about investing, and what vehicles are you investing in? And what are some of your bigger goals moving forward with money?
So I was turned on. Do you know who Mike Maloney is?
Mike Maloney? No.
So he wrote a book called Silver and Gold. He's a big proponent of silver and gold assets, but he also created this YouTube series. It's a 10-video series called The Hidden Secrets of Money, Money versus Currency, or Currency versus Money, something like that. But it's called The Hidden Secrets of Money. It's 10 episodes on YouTube, and they're really well done. And he talks about the creation of money, how money grows, the debt, and what's happening in our society, and how the money that we have is just paper money. It's not actual real currency.
Right.
And all currency, all paper money at one point in time has all gone to zero. And so, not to sound like a doom and gloom, worst case scenario, but he said there's no currency that has stood the test of time. It's even happened in America a few times with the Continental Dollar and other, Union and Southern money as well, due to inflation, which is why things were backed up by gold and silver until we got taken off the gold standard. And so, so now that we have more money, I'm trying to feel like, all right, what do I do with this so that it just doesn't lose value because of inflation? Because so right now, instead of taking the Dave Ramsey approach of 3 to 6 months in savings, we might have 3 months in savings, but everything else we're putting in other places for stored value that are also growing with the rate of inflation. Because if you're only saving money that gets you 0% interest, then you're actually losing money because the inflation rate is going higher.
Right.
And then your dollar becomes less valuable. So right now, we're putting money into silver and gold. She has her 401k. And then with money that I'm making, with the extra stuff, we're putting it into cryptocurrency for a couple of reasons. One, I understand cryptocurrency a lot better than I do the stock market. And I feel like the stock market is a little bit more rigged than cryptocurrency is. And right now it's very much the Wild West and it is extremely volatile. However, in the last 3 months, we've made $5,000 off of everything that we've put into it. And so when you do invest, you need to have a good understanding of what you're investing in and not just taking shots in the dark, or else you're going to lose your money. That's why I didn't put money in stocks, because I just didn't understand it. And one of the very first things, and I think you'll be able to like this, Kevin, one of the very first investments I ever made was into myself and having a house. There's this idea that's out there that your home isn't an asset, but it's a liability because it takes money from you. However, I don't necessarily agree with that, because I would be spending the money, whether it's my house or rent. And if I were to rent my house, it would cost me $1,500 versus my mortgage of $850. So not only is it actually saving me in terms of a rent scenario, but I'm also building equity. So right now in our own house, I have probably around $80,000 of equity because I bought right. Sorry, I thought I was going to sneeze.
Yeah, you're okay. You're okay.
We have about $80,000 of equity because I bought a house in a good area that was depreciated because of issues that it had with the house. So I got it at a great rate, put $10,000 into it. And so, we bought it for $126, put $10,000 into it. So let's say we're in it for $135. It appraised at $145. However, that was on the low end before any of the fixes or changes were even done. And so now, having it been updated, the house appraises for more. And so you want to find ways to build your net worth and invest in things that you know. And so I knew real estate. And so every time we've owned a house, I've looked for similar scenarios to make sure the equity will be there when we purchase the home. So that's what I would tell people.
Yeah. You described it, and you did a great job describing it there, guys. Out there, with your money, save for a purpose, I say. Don't save to save for a purpose. And you're in the gold and silver space, which is a fine space, because we know the value of that stuff is, currently been going up dramatically. And it's always a tangible item that you can actually trade and barter with. Money, what we call today, is called fiat money, right? Fiat money, it's just paper. It doesn't, the $100 bill in your pocket is meaningless, right? We're just trading something for it.
It's only the value, the perceived value of the faith that we all give it.
Exactly. And so creating assets, right, with the money that we're all making, creating assets is what will substitute away that fiat money. And in the event one of these days when the government's going to be like, okay, all your cash dollars are worthless, and they're going to figure out some way how to get us to have, if you had, I'll just round number, $10,000 now equals, 4 pieces of gold or whatever. So creating assets along the way that have value that you can sell at whatever later date if this currency changes, which history shows it will at some point. Will it do it in our lifetime? I don't know. Time will tell, but it will. It's just history shows it.
If we keep printing the way we are, I think we'll hit that within the next 10, 15 years.
I think you're right. I
really do.
I think you're right. So you have to ask yourself the question, what can I do to best prepare myself in the event when this event happens that I'll be safe, right?
So can I answer that?
Go ahead.
So, to the best of your ability, learn and study global economics and what's happening and hard assets. So, let's say the global currency system changes. Well, what is it going to change to? More than likely, it's going to go digital because it's already like we have paper money,
Right.
but when we did the stimulus checks, did you receive a check? Most people didn't. Most people received numbers in their bank account.
Exactly.
Everything is moving digitally, which is why cryptocurrency is more than likely its future. Specifically, which coin, we don't know. I highly doubt that coin has even been created yet.
Right.
In the meantime, there are coins that are created that are growing in value. And what makes crypto valuable is that, one, you can't control it in the context that you can't inflate it. There's a set value and time that these will roll out. And then the other thing too is why, and you need to be careful with crypto, you want to look at who made it, what purpose value does it bring, and then the other thing is are the companies and the people who create it meeting all their other goals in a timely manner. And so if they're reputable people that's solving a real problem and they're meeting their goals, chances are it's a decent coin. Highly skeptical though, but if they're meeting those criterias, it has a shot to be a decent coin. And so when you do invest in crypto, those are the things that you need to look at and be very vigilant on not letting your emotions, because I think we handle finances emotionally and try to take your emotions not only out of the crypto space, but just in general. It's hard to make life-changing decisions financially when you're emotional.
100%.
So coming out of a place of desperation, sometimes people try to get rich quick. I have a friend who put $16,000 in one cryptocurrency, and granted, it doubled, not a lot, but it doubled. Great for him. But it could also go to zero really quick.
Right.
And use out everything. Me, I have probably about 10 different coins. So I try to be diverse.
Right.
And I'm only willing to lose. I'm willing to lose what I put into it.
Right.
And so.
But that's investing. And investing, again, do your homework when you're going to invest your dollars anywhere. We can talk about what the pros are going to consider safe vehicles to put your money in. I'm a big believer in what Warren Buffett says, bet on America. Bet on America, right? And which means, listen, invest in American-made companies. But do your homework. Warren Buffett doesn't invest one nickel until he, on average, studies a company for a whole year before he'll decide to put any money into a company, buy a company or invest in a company. So he digs in so deep that he knows by the time he's going to go ahead and pull the trigger and invest that, I'm not losing, because he only has 2 rules to investing. Rule number 1, don't lose money. Rule number 2, don't forget rule number 1, right? So, and the only way that you can do that is by doing your homework. So the way you're describing is, listen, guys, when you're out there and your buddy says, hey, you got to go buy this stock or you got to buy this crypto, you got to buy whatever they're telling you, whoa, slow down. Like, don't race down to your house, get on your online and buy whatever. Do your homework. Because at the end of the day, if you take somebody's advice heedingly, like really fast, when you lose your money, you only have one person to blame, which is yourself, right? Don't go blame your buddy who gave you that little tip, because it's not really his fault, because he probably just heard it from somebody else anyway.
Right. Well, and the other thing too, to protect yourself against this impending global economic change, when it does happen, during COVID, that really taught me a lot about global economics, how the markets in general slowed down, and then even the food industry really struggled on getting food out. And so one of the things too is learning how to be self-reliant. If you can position yourself with assets and to be self-reliant, you will do really well in a global economic change, which is coming. Like, it's not just me saying that. I mean, I'm getting it from experts all over the world.
No, agreed. Listen, something has to give. Like you said, you can't just be the amount of money they are printing, which, I mean, you can't even fathom how much $1 trillion is, and they're printing multiple trillions of dollars. Physically, it's 100 yards wide and 100 yards tall if you stacked $100 bills. It's just a ridiculous amount of money. So yes, prepare yourself out there. Put yourself in a position, everybody, that and I don't think it's going to happen. It's not going to be an overnight thing. We're not going to wake up one day and just, some giant tsunami of money crashing down on you is going to happen. There's definitely going to be signs and signals. So be careful with your money. Don't blow it.
Watch those videos, because he talks about different signs and signals to watch for, and one of them is inflation and the consistency of printing. Right now, with all money in the current U.S. system, I think we are now, with the last few stimulus checks, probably at like 60% of all money that the U.S. has was created within the last year and a half, which is really scary to think about.
It's really scary. They print it and they give it away digitally. So it's out in circulation, right? And unfortunately, it's all funneling, going to the people who just making the rich richer, and the poor are just barely getting along to get through there. So, man, what a great story. I tell you what, I think the big takeaway here today, guys, with Evan is we know his story. Like most stories that you're going to hear out there as a child, that unfortunately, we are not taught financial literacy in school. And unless you're proactive in learning it, you're going to do the journey that Evan did. So many people do. You end up being in your late 20s, early 30s till you really figure out how to handle and work with your money and do the right things to put yourself in the best possible position. So, Evan, I want to thank you for coming out. I think everybody out there's had some aha moments. And more than anything, when they're done listening here, man, they got a lot to chew on, and they got a lot of homework to go do, I think.
I was just going to say, can I give one last piece of advice?
Go ahead.
Don't be scared.
Right.
Because a lot of people don't jump into financial literacy because they're afraid of what they're going to see. And so it's easier to ignore conflict. And so I say, roll your sleeves up, get in the conflict, understand it, because you will protect yourself much better by following through.
Great advice. For me, I just say, listen, guys, we're in the middle of a game financially. And just like the games you all learned when we were kids, right? Let's say checkers or Monopoly or something. Until you learn the rules of those games, you weren't winning those games. Right? So what happened? You studied, you learned the rules of the game, the strategies, and you won. And the money game is not difficult. You just have to be proactive in learning it. It's that simple. And like you said, I love the fact that you said, don't be afraid. Don't be afraid. Awesome. Well, listen, guys, if you like what you heard, smash the like button on the YouTube channel, because this will be on my YouTube channel, and subscribe to my channel. And on the podcast, subscribe to that podcast. And remember, I come out with a new podcast every Wednesday at 7 a.m. And Evan, he'll be out in about 3 weeks. And Evan, I'll shoot you a little message when you're getting ready to come out, and you can share it with your folks. But remember, go on and listen to Evan's podcast, The Whole Person Podcast. You on most platforms out there, Evan?
I am.
Evan, awesome. So, guys, you take care, and we'll be talking at you again next week.
Hey, everybody. Hope you enjoyed that episode. Really enjoyed making all these episodes for you. Remember, we're just having conversations with people's journey with money, and the things they did right with it, the things that did wrong with it, and how did they really come about getting their mindset with money. So every episode's different. We all have a good takeaway from them. So do me a favor, hit the like button, smash the like button, and subscribe to my channel, because every episode that I do is going to be different, as all our journeys are different. So you guys take care, and we'll talk to you next week.